Let's start off with the NSE, which is trading very boring almost. 3 points every single week is how much the NSE 20 share index has picked up.
That is better given the alternative, and especially given that the last 2 weeks actually we've seen a lot of tremendous activity. We've seen a lot of local investors actually giving up most of their bargains which are being snapped up by foreign investors. We've seen that the banking sector, which actually has been contributing largely 40% plus of all the trades in the last 2 weeks, is actually now slowing down with a lot of trades from Equity, Barclays, and KCB. But this is actually more attributed to the fact that people who've been driving the aspect of a lot of trades and a lot of growth for the index are foreign investors. And I think right now they've been able to take up all the bargains, so that they're turning their eye to the bond market, to the bond segment. And this is all in line with them trying to position their strategies in terms of catching up with the profit margin taking. Because at the end of the day, we all know that foreign investors have better access to information than local investors. So they found a better opportunity to get into the market, while local investors thought it was the best time to exit. So maybe this week and next week things are going to be slow a bit as we watch and see after most of the companies have released the results. When they start trading ex-dividend, then we'll be able to tell the next way for them. But
the market has picked up in the last 100 points much faster within a week or so than this last 50 points that are required. 49 points or so to get to the 4,000 mark.
Key fundamental aspects.
Yes.
One, the need, I mean, most of it because companies were about to close their books last week and this week. So we saw that people actually needed to get in before, to be able to benefit part of the dividend yield. So this is one of the reasons why. Two, we've been able to see that most of the companies released the results. Some were positive, some were, intermittent in between. So these are the key issues. We've also been able to see that given the fact that we can't really tell the future in terms of political aspect. So many of the key investors, like fund managers, mutual units, and insurance firms have been able to reposition their stand on where they want to put their money for medium to long-term investment options.
A little footnote in this story is about the Nairobi Securities Exchange moving from the Nairobi city center after 58 years to its own building somewhere in Westlands. It's a leafy suburb here in Nairobi. What do you make of this? For
me, one, I don't think it will actually serve the public.
Why not?
Because where they're situated right now,
it's in the middle of the city, nation center.
It's where many of us will actually go to in as much as we've seen a lot of investment in the digital world, whereby you can trade from your office. There's what you call a loop between the traders and the market in terms of exchange. We've seen the CDS is actually connected via internet. Right. So this, for me, I think it's a symbolic move. But we will have to wait until it pans out for the rest of the public, because at the end of the day, there's a lot of civic education that needs to go out. So many people still walk into NSE to ask for information. Moving to Westlands, it's like an elite suburbia.
That said, there's not much activity that happens at the Nairobi Securities Exchange. The floor is always empty. We don't have the red jackets. We don't have people writing on that board anymore. It's something similar to this.
Not necessarily. I'll tell you this. 70% of the people who have stocks at the NSE, they still have them in certificates. A lot of civic...
They haven't moved to the CDSC, the electronic platform.
So, and many of these people, given what's happened to Nyaga and Discount, it's hard to actually trust anyone anymore in terms of investment. So it's easier for you to walk to CDS itself and easier for you to walk to the NSE. And we've seen that CDS and NSE actually are on the same building currently. So it makes sense to go to one floor, finish up, go to the next.
And there's even a stockbroker on that building as well. Let's move on to some very quick fire things. One of them is Olympia Capital replacing its long-serving CEO, Michael Matu, as we said at the top of the program. And they've picked actually a new CEO from one of its subsidiaries, Martin Platt.
We've seen Kenneth, who was heading Martin Platt, now being picked to head the main division. And this is because, one, after 17 years, the outgoing CEO has actually said that, how many ideas can you have after 17 years?
Exactly.
And two, we've seen that the strategies that have been put in place are actually now working. And I think the new guy is supposed to actually ensure that this team continues. And one of the keys are to ensure that they buy out Martin Platt, they buy out the minority shareholders at a deal that's expected to be at 84 million shillings, so that they can be able to have full control in because the engineering equipment firm has really been one of their key profit driving firms. So we're able to see that Olympia Capital is one of the stocks to watch.
Read this for me very quickly. British American jumping 2.4% to a new year high. Anything interesting there?
They've rebranded.
Right. Rebranding is not much, really.
Actually, it is because one, you see, previously they're being known in two brands, Britac and Britam.
Yes.
Britac in Kenya, Britam across East Africa.
Yes.
And we all know that insurance is a virgin ground. For them to go under one brand means it solidifies the operation, solidifies the management, and you're able to see that now it's one brand across East Africa. And
so the difference between an M and a K is quite significant in this case.
I mean, you see, we also need to understand the dynamics in terms of investment.
Yeah.
When you look at the name, we look at the people out there perceive, the element of security, the element of perception. So brands go with perception. And in insurance, the element of trust is very key.
Let's talk about fixed income securities very quickly. Yesterday, the central bank's 15-year bond oversubscribed quite significantly by 24 billion shillings, the kind of bids they received. They took up to 17 billion shillings, and the yield fell quite steeply to 12.09%.
57% of the local investors have actually come out of equities. They're directing their cash into the fixed deposit, government debt.
Yes.
So you're able to see that local investors are looking for secure options, looking way ahead for medium to long-term investment. We're also seeing that the drop in interest rates has something to do with this, and also given the fact that they need to actually have a secure option in terms of being able to know that my investments are safe. This is the driving force behind all this.
And finally, the shilling snapping a 2-day losing streak yesterday. Very quickly, what do you think it's going to end?
Depending on if central bank continues what it's been doing,
right,
then we'll see a stronger shilling, because at the end of the day, we've been able to see that all the policies have been executed to the latter. But they need to look at how central bank and the commercial banks are going to look at the repo market and are going to look at the interbank rates will actually determine a lot.